What is the point of creating new content when it is already available on the IRS website? My aim is to interpret IRS laws in a story format for a comprehensive comprehension to steer clear from confusion. What benefits of Section 1031 exchange persuade taxpayer to choose it? This is my today's topic. And this is one of the episodes of my series of tax saving planning for selling property for profit. This is Nashimo, the CEO of InfoTaxSquad.com. We are a team of CPAs and EAs. Greetings to those who are connected with my channel and greetings to those who have been using InfoTaxSquad.com for their business needs for years and years. I request attorneys, tax preparers, taxpayers, entrepreneurs, students, economists, and the most important politicians who create laws to subscribe to my channel to receive the most up-to-date and accurate tax information to enhance their knowledge. A like-kind exchange, also known as a Section 1031 exchange, is a powerful tax deferment strategy in the United States. I'm going to share a few features and the characteristics of 1031, which may be very beneficial for taxpayer to opt. Number one, the proceeds. The proceeds are used to purchase another property of a similar nature of character within a specific time frame. Number two, the capital gains tax on selling the first property is deferred until you sell the new property. Number three, the tax on capital gains can be deferred, which allows your investment to grow tax-free until you sell the new property. Number four, your investment can grow tax-free until you eventually sell the new property by deferring capital gains tax, which is the primary benefit. To diversify your investment portfolio, you can invest in different types of properties. And the last point, or the last characteristics of 1031, which I am going to share in this program, which is one of the episodes of my series of tax savings planning for selling property for profit. Deferring taxes also allows you to reinvest the full amount of proceeds, potentially leading to further growth and an increase in your overall wealth. Let me just conclude about the 1031. 1031 exchange, Section 1031 exchange is a property if you are planning to buy the same nature of property in a certain time. So you can defer your taxes rather than you pay taxes on your proceeds. You can defer it if you are exchanging your property with the same nature. I'm going to share with you a case study from preventing taxes if you choose Section 1031 rather than selling property. Jackson plans to move his business from South Florida to Central Florida. He intends to use the proceeds from selling his warehouse and use in his business to purchase another warehouse in new business location. So what is my advice for Jackson if he is planning to move from one location to another rather than selling his property? I'm going to present here a little comparison between exchange and selling. The exchange of like-kind property is allowed under Section 1031. Section 1031 defers recognized gain or loss to the extent that real property productively used in a trade or business or held for the production of income, such as an investment, is exchanged for property of like kind. Under Section 1031, realized gain is usually recognized only to the extent of the boot received, which includes cash plus fair market value of the other property plus net liability relief. Because Jackson is buying like-kind real estate, he could postpone any capital gains on the sale of the warehouse by conducting a Section 1031 exchange. So what is the conclusion? Here, Jackson will be better off exchanging a property rather than selling it and and paying taxes on the proceeds. Thank you and God bless you.